Good afternoon. Welcome to OptionsTender. It is Tuesday. We're looking at Fed or Chairman Powell meetings with Congress today and tomorrow. I thought those catalysts might have happened, but really, I think really is what the market's waiting for is CPI and PPI, and we're getting that before the market tomorrow. So I'm just doing a short video and going to reiterate some scenarios here of what might happen tomorrow and show you an example, actually. So make sure you stick around. We're doing this intraday, by the way, at about 12:22 Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member for 99 cents. Comes with the Discord, trade alerts, etc. So let's jump into it. Right now, it seems as if the market isn't going to make its move because you have the Dow kind of holding things still. So even though we open up, gap down, it actually went green on tech and the market, and the S&P. We're back down into the range again, and so I really don't think this is going anywhere today. But anything could happen. So just be cautious, especially if you're long. Be cautious. But here, and close that up. Here is the one thing that I want to reiterate. SPX, okay? We're not going to go to the higher time frames, but this is the 2000 along with the 1929 top here. And this one is the 2008 aligned with 2021. All right? So just no matter what, I'm bearish underneath those. But what happens if we gap up and eke out a new high, just like this one? Eked out a new high there, right? Right back at that trend line. We've wasted enough time to where this could gap up, make a new high, satisfy whatever everybody's talking about this being a bull flag, and I'm still going to add puts there. That's an objective short all the way up here, 61.40, 61.45. Okay, so I'm ready for that situation to happen. So at the end of the day, we'll probably add on some SPY out of the money calls up here, and I'll show you. I'll translate that on the other on SPY. But I want to show you. Here's what happened in CPI way back here, and I want to say 2020, doesn't really matter, but what is that? 2023? No, we're going further back. 2022, near the bottom there, right? So we had a top in 2021, and we took a year lower in 2022. So we had this downtrend line headed here, rejected off of it, closed, CPI gapped up to here, fake break over that trend line, and ended up dumping after that. So huge gap to make a new high. Made a new high from that point. There's nothing saying that this couldn't happen. Gap up, move up to here. That would cause so much pain for the bears. So we're going to add some calls just in case. And just in case that scenario happens. So I just want you to be aware of that. Whether you're bullish or bearish doesn't matter to me, but be aware. If you're bullish, maybe that'd be a good time to get out. If you're bearish, maybe you should add on or start a position, because that would be the top of the megaphone. This pattern showing here, that would be the 2008 to 21 top in this turquoise. There's not enough information back to 1929, so I don't have the trend line for 1929 there. And this is about 611. Okay, we're looking at about 611. That's what we're going to key in on for the overnight reaction. All right, and then so really I'm basing this scenario off of we head lower from here, or we gap up and head lower from there, from that point. Okay. Now, everything else is kind of the same. We're looking at, let's see if we can time and price here. We're already in the window for the weekly time frame. We know that. So we don't have anything today for time and price on the daily. So when we start getting into the 20th and the 26th, those clusters here, we'll see where price is, and then we'll determine if we're already higher, will we get a reversal for lower at that point? What we do at that. So 65. So again, gap crap, because that would form another weekly bearish divergence if price were to do that. Okay. Or what most people were looking for, this scenario isn't out of the realm to where we get a move down here. That box was kind of the target area with this uptrend line, and that would make a 1-2 setup, and the bulls can go from there. Okay, so until the larger range resolves, I mean, we have so many things. Gap up, maybe make a low, go higher. But if this breaks, which I think that's the scenario, most likely scenario, that's what I'm playing. If this breaks, then I think we're going much lower. You know, even though this technically is a flag and you can backtest this here, I don't like that situation. The trend line's already broken at that point. I think we go lower to the target areas down here. All right, in this time frame, as a matter of fact. QQQ. Same look there, but it should be obvious, okay? It should be obvious with the gap up tomorrow that this is a breakout. And so if this holds, then we continue higher, right? It's as simple as that. If we break down, I think we're headed to this direction into next week. So we're at resistance on the Qs. SMH, we're at resistance. Just back testing this big old bear flag. At resistance, okay? Nothing says it can't get back in it. But for now, this is an objective short once again, okay? It doesn't change. SPY is not necessarily at, well, it is at a downtrend line, a minor downtrend line, but it's not at the top of that wedge, while SMH and the Qs are just pressing against that resistance there. SMH just a little bit weaker. Again, in a consolidation zone though, right at support. See how that goes. And I did a individual analysis for the individual members with tech 2 days in a row now, because I want to keep a big eye on that. And essentially what it was saying is the big tech names, a lot of them have dropped already. Are the other ones going to follow down? Or are the ones that dropped going to catch up to the upside? And I'm just keeping it simple and clean. So we'll be watching for that. DIA, same thing, just like IWM. Is this setting up a 1-2 and heading higher? Or are we just making lower highs and this starts to break down? The VIX. Here's the VIX. I think this is the low. I think this is good. And it's going to break out of this consolidation. But if we start to see this breakdown again and start to make some new lows, it's going to have to rapidly regain it. Again, if this gaps down tomorrow and it doesn't rapidly regain, then the market's going higher. Okay? So this would be a breakdown of the VIX and a breakout in the market. And we'll have to see, is this a big green candle after a gap down, a big green candle? Then that's going to be bullish. It's going to be a fake break, bullish for the VIX, right? And so the opposite would be happening on SPY. All right, so keep an eye. If this breaks down overnight, follow it, but don't just start jumping into calls immediately. See what happens. See how this resolves. All right, let me say that again on SPY, so I'm not talking inverse. If this gaps up like it did back in 2022 and gets a higher high, don't just start buying calls automatically. See how it reacts to this upper edge. All right, I'll be buying puts at that point, personally. But watch how this reacts. Give the market some time, because if it reacts up here and you have the big red candle in the daily time frame, it's a really bearish situation. All right. Now, if it comes up here, puts a wick, and starts getting above and holding above this big old wedge, then you can start looking for some calls. All right, if you're not already in calls. Okay, that's what I wanted to put across today. Nice short video. Thanks for all the likes and subscribes and all the support here. I'll talk to you on CPI tomorrow.